Hey everybody, I just want to make sure that you guys are with me. If you can see me, just put some messages in the chat and let me know that you guys are with me. Welcome to, what is today? Today is day 3 of our live stream. Yes, hello, can see you. Thank you so much. So first of all, I want to get rocking and rolling because I want to start by saying thank you for being here. I am so appreciative of like the people watching my videos, the comments that you guys give me, the attention that you're showing up here and you want to learn options trading. That just makes my heart happy. I mean, I believe I live an amazing life, and I think everybody can live an amazing life. And it just, I don't know, it's just very, very fulfilling to be, I don't know, instrumental in helping people accomplish what they want to do. So kudos to you for being here, and I appreciate the love and all the support. We're gonna go 30 minutes today, no longer than 30 minutes. My kids are here from LA. My son's gonna fly back to LA, and he's gonna be going to the airport shortly. I know I've said this before, but basically I trade to live. I don't live to trade. So, I want to make sure that, all the stuff that I'm doing really fits into the lifestyle that I want to live. So I want to spend a little bit more time with him before he heads off to the airport. So we're going to go 30 minutes. I'm going to walk through my platform. I also want to let everybody know that I've been using this paper account, and I never really, I hadn't really used a lot of paper accounts in the past. And they are limited in the sense that if you guys were here, or for those of you who were here on Wednesday, I was trying to buy a contract back and it wasn't filling because paper accounts aren't exactly like real accounts. So here's what I'm going to do. I'm going to open a new account. I think I'm going to just open a new account with like $5,000. A lot of people on this channel ask me, they say, hey, I don't have a lot of money, or hey, I want to start and I want to start small. I don't want to lose all my money. How do I get started, get my feet wet kind of thing? So I think it would be most helpful if I start an account that's similar to how you guys, the bulk of you guys, would start an account as well. So what I'm going to do this next week. I'm just going to move $5,000 into a new account, and I'm going to figure out how to mask the account number so that doesn't show online. And then I'm going to show you exactly, it's just going to be more exact. It's not going to be a paper account, and you're going to see the fills live. And then I'm also going to show you on Schwab. So here's the thing. I use Schwab, Thinkorswim. I've used lots of different platforms before. So don't worry. If you're not using Schwab, it's totally okay. I've used Interactive Brokers. I've used Tasty. I've used, who else have I used? Tradier I've used in the past. TradeStation I've used in the past. I've used a lot of different brokerages. They're all kind of similar. So if you're not with Schwab, it's not a big deal. But if you are, it's just easier to follow along. And the way I use Schwab is I use Thinkorswim for trading and to see the option pricing and the charts and things like that. And then I use the Schwab online site to see my positions. So honestly, using a real account is actually going to teach you a lot more specifically. It's actually going to teach you 100%. So stay tuned for that. I'm going to do it. I'm going to start the process on I don't know, next week, I guess. And what I'm going to do is I'm going to do it from the very beginning. So I'm going to record some videos on exactly how to open the account. I know sometimes I get comments on this page, hey, I tried to get option trading authority with whoever, and they won't give it to me. I'm going to show you exactly how to walk through it. So I'm going to show you from the very, very beginning. So stay tuned for that. So yeah, let's go. Let's see. The real account would be great. Putting your real money on the line is beyond appreciated and shows your teaching heart. Thank you, Austin. I think that is. Yeah, I mean, hey, I don't get paid for all this. Although I do, in fairness and full disclosure, I am making a couple bucks on YouTube now because my channel's monetized, which is kind of cool. And it's not a lot of money, and it's nothing compared to my trading income where that's been. But it is pretty cool. I mean, I guess what I'm saying is the biggest reason why I do this is because I want to help people just create the lifestyle that they could have. So I appreciate you guys being here. And thank you. You totally deserve it. I appreciate that. I appreciate all the love in the comments. So here's my trading account here. This is the paper account. So I want to kind of point out just the high level stuff that you guys want to pay attention to. Net liquidity, right? So any platform that you have, your net liquidity is kind of like, or it might say net lick value, account value, it might be called. That's kind of like your walkaway money. If I liquidated all the stuff in my account, how much money would I have? So we'll see that I started this account on Monday with 25,000, and if I liquidated everything, it's worth 24,510. But here's the thing, guys. I'm not freaking out because I'm not liquidating anything. So your net liquidity value is like, okay, if you liquidated everything, if you closed all your positions, how much money would you have? I'm not closing my positions. And the purpose of having my positions is to create ongoing income. So I'm only going to pay attention generally to realized gains and minimizing or eliminating realized losses, right? So that's an important thing to keep in mind. Don't pay attention to all this other stuff, cash and sweep, option buying power. I'm only going to kind of go through the important stuff, and we're going to look at the holdings right now. So now, and it's going to be good next week when I move over to the actual live platform, because I typically don't look at my holdings in Thinkorswim. I look at my holdings and my positions on the Schwab page. So that's going to be better. I'm excited to actually do that. But in the meantime, before I get there, here's my positions, right? So you'll remember from the other day, we bought 100 shares of Big Bear, right? BBAI. How much did I pay for it? I paid $7, right? $7.01. Now Big Bear is trading at $6.18. So it's lower than what I first paid for the shares. That's totally okay. It's a paper loss. Listen, paper losses don't mean anything unless I actually sell my stuff and then I turn it into a real loss. So we're going to ignore that for now. So we're kind of just going to get a sense on where we are. So we have this 100 shares of BBAI. And then you might recall that I had sold that $7.50 call, right? So I bought those 100 shares at $7.01, and then I sold a $7.50 call that's expiring today, right? So today's November 14th. Right now it's 3:07, so there's another like 45 minutes, 50 minutes or so for the market. Assuming that Big Bear closes under 750, that call is going to expire worthless. That's how we say it. That call is going to expire worthless. Now we can see where that stock is trading, where that contract is trading rather. It's trading at like $0.50. So all the contracts have a market value, right? So I originally sold that for 14 bucks, meaning that I got paid $14 in my pocket. I keep that no matter what happens. If I wanted to buy that contract back right now, I can do so at the market. So here's where it's kind of trading right now, 0.005, right? I also have a Big Bear put, a 550 put, and that also expires today. I had sold that for $30, right? You see the trade price is the price at which you sold that specific contract. And right now that's also trading at $0.50. What that means, because Big Bear is trading at $6, right? $6.17 right now, it's probably not going to trade or close rather under 550. So that means this contract is also very likely going to expire worthless. Now, on Wednesday, I think I tried to buy this back and it wasn't letting me. That's why the new platform is going to be better, the actual live account. But if this was a live account, I always highly suggest, okay, I sold it for $30. I can buy it back, especially for puts. Really, like once you recognize like 80, 90, certainly like 95, 99% of all the money that you can make on that particular trade, it's very beneficial to buy that back, give $1 back to the market, and take the risk off the table. And the reason you want to do that is because let's say something happens. Like, listen, the market is not always anticipatory. Like you can't always anticipate what's going to happen in the market, right? So sometimes something happens and it drops significantly, very, very quick and unexpectedly, right? So instead of sorry, I've gotten a little bit of a cold as well. Man, New York weather sucks. Who here is from the East Coast? Man, I want to go back to LA. I'm going to go back to LA next week, I think. Yeah, New York City is an amazing place, but the weather is terrible. So sorry about my voice kind of cracking. I'm drinking some coconut water. But what I was saying, what I was saying was this. It's always better, in my view, to buy it back and then take the risk off the table. So you don't have to worry about having to buy the shares if the price comes down more, right? So let's kind of keep walking through. And I see these comments, and I'm going to go through a lot of these questions as well, because I want to make sure that you guys come here and you have questions and you get your questions answered. So that's super important to me. Remember IBIT. A couple of you corrected me about the pronunciation of IBIT, saying that it's IBIT. Listen, potato, potato, IBIT, IBIT, it doesn't matter. Maybe you do pronounce it IBIT. So I stand corrected if it's pronounced IBIT. I've been saying IBIT. I guess it doesn't really matter. Anyway, that's my joke of the day. Let's look at IBIT real quick, and I'm going to keep saying IBIT because I'm just used to saying that. IBIT is trading at $54.23 right now, right? Now, we had sold a $59.50 put, and I got paid $74 for that, remember? Now, if I wanted to buy that contract back right now, I could do that, but I would take a loss. So here's how you guys want to look at that. Okay, IBIT is $54, and I sold a $59.50 put. So assuming I do nothing, that's going to get assigned. That means Monday, I'm going to have 100 shares of IBIT show up in my account, and it's going to have a basis of $59.50 because that's the strike price, right? That's the strike price for the contract that we sold the other day. Now, on Tuesday, now different brokerages handle this differently, but the way Schwab will do it is on Tuesday, this contract will get adjusted. So it won't have a basis of $59.50 anymore. It will have a basis, just so you guys know, $59.50, and then it's going to adjust for the premium, right? So I took in $74 in premium. So I'm going to do $59.50 minus 0.74. On Tuesday, my adjusted basis, or the amount at which I will own the shares, will be $58.76. So that's important for you guys to know. Why is that relevant? That means that I can sell a $59 call. I could still sell a $59.50 call. Hey, you can sell whatever call you want. Generally, I sell a call right over, either at or over what I own the stock for. Why? Because I don't care about the stock. If I had a preference, I'd rather just get rid of the stock. Because if I can drive income off of cash in my pocket instead of having to hold shares, I prefer to do it that way. I don't mind holding shares as long as it's a good stock. But if I had a choice, I prefer to drive income off of just holding cash, right? So it's going to be better. So that's kind of like walking through our positions. Now, if just continuing with IBIT for a moment, if I wanted to, why would I want to buy this contract back? Well, a couple things. So first of all, I want you guys to recognize this. When you trade options, you are not stuck in anything. It's very good to have some flexibility. Like if you change your mind, I don't know, let's say something happened and I don't know, I say, you know what, I think I do like Bitcoin long term, but maybe it's going to come down for a bit. Or maybe I need to access some of the money in my account. Or maybe I just don't, I thought I was okay with taking the risk, and maybe I'm not okay with taking the risk. You have the flexibility to buy your contract back. Now, if you did that, here's how you would do it. Now, I'm not going to do it because I'm okay taking the shares, but let's say if I did want to do that, I'm going to go to the trade tab, right? And I'm going to find my contract. So here's the November 14th date, the expiration date. And then I am going to, let's see, that was a $59.50 put, right? So $59.50, our strike price is down the middle, right? Puts are going to be on the right-hand side. Remember, calls are on the left. And when you have a position, it's going to be marked by this position marker, this red POS. This is this particular platform, but they're all kind of similar, right? So if I wanted to buy this back, I would just click on, you see the bid here and the ask. You don't have to remember which one to click. You're going to click on the higher number, right? So when you buy your contract back, you're going to buy at the higher number. So let's say, let me just illustrate this for a moment. If I click on that, and I'm always going to take a look and make sure I can see everything on the same window. it pulls up this buy box, right? So this is my order entry box, right? Now, it's okay if you click the wrong thing. So let's say if I click the lower number first, the bid, it pulls up a sell box. And then I can simply just click into this column here, this side column, and I can just change that to buy. So this is how I would do that if I wanted to buy that contract back. And buying the contract back does this, though. It takes the risk off the table, but it also recognizes a realized loss. So I want to be super clear. So many people on this channel and I guess in the market in general, in the trading community, talk about rolling contracts, right? So here's what I suggest you not do, right? You could do a couple of things. I mean, certainly you could always do whatever you think is best because it's your money. I'm only here trying to educate you. You got to make, you got to take responsibility for your own actions. But here's your choices. You can take assignment, right? Meaning that, okay, the market's going to close. It's going to close underneath my strike price of $59.50. I'm going to buy those 100 shares, and then I'm going to sell a covered call against it on Monday. Or maybe I'll look to sell another put, or maybe I'll look to buy some more shares. There's lots of different things that I could do. Or I could change my mind and not buy the shares and buy my contract back. Here's what I would encourage you to never do. So pay attention, guys. I encourage you, excuse me, I encourage you to never roll. Meaning, I encourage you to never do this. Buy this contract back and then sell another one for next week that's lower strike price. I think that's not smart to do that. Here's why. You're taking in a realized loss and you're like kicking the can down the street. Like you're closing one leg, you're recognizing a loss, so you're actually losing money out of your pocketbook. We say it like that. Like realized gain and realized loss is like money that goes in your pocket or pocketbook, or money that comes out of your pocket or pocketbook. So look at it like that. I mean, it's one thing if you want to just change your mind and you don't want to buy the shares, but don't buy the contract back and then sell a new one for next week. I just think that that's goofy. I think temporarily, maybe that might be something that might make sense on a short-term basis, but long-term, from a long-term trading perspective, it's not a good idea. Listen, I've been trading for a really long time, years. I started trading in 1997 in futures, commodity futures and options, and then stocks. I don't know. I've been doing this for eons, actually. Long time, many years, 15 years, something like that, full time. Not having any other income. And what I mean by that, and the reason why I'm sharing that with you, is because I've seen like lots of different cycles, market cycles that go up, market cycles that go down, market cycles that stay sideways, different market cycles for different kinds of sectors for stocks. And it's super easy to make money short term in the market, but it's harder not to like blow up your account and not to lose money. Again, it's always going to be your decision, but I think one of the very worst decisions that traders make is rolling a contract. And to explain what that means is taking a loss, buying this contract back, taking a realized loss, and then selling another put with a lower strike for next week. I just think that that's a mistake. If you want to do that, you could do it. Certainly, it's your money, but I think that's a bad move. Let me take a look at I think I have the chat here. So I just want to, options queen. I like when people call me like cash flow queen, options queen. Man, that's like super cool for my ego. Thank you for that, Carlos. Let me see what questions I have here. Let's see. The real account would be great. Putting your real money on the line is beyond appreciated and shows your teaching heart. I think I read that one before. Let's see. I just sold a put that expires. Excuse me. Adam, grab me some coconut water. Do you mind? Adam, grab me some coconut water. Do you mind? Oh, I'm so thirsty. Let's see. I just sold a put that expires after today's close. When will the collateral be released? After close or tomorrow? So I think, let me figure out what that means. Thank you. Let's see. I just sold a put that expires after today's date. When will that collateral be released? So typically, I think what this question is asking, if you sell a put that expires today and that's going to expire worthless, that collateral will be released after the close of the market. So typically, no, I'm good. She got it. Typically, what that means is on Saturday. Now, different brokerages are going to show your data a little bit different depending on when their update is. But generally speaking, on Saturday, you're going to see whatever that changes, right? So you're going to see the position gone. So you're not going to see the short put on your holdings page anymore. And you're also going to see that that money is not being held for that position because the position's gone. Good question. Let's see. Somebody said just moved out of New York. New York is a cool place, but man, the weather's terrible. Let's see. Where do you see in the Thinkorswim your percent gain on the trade to buy back? Oh, that's a really good question. You know, I don't know the answer to that. So the question is this: where do you see in Thinkorswim the percent gain? I don't know because I don't ever use. I use Thinkorswim only for trading. So this again, like I mentioned before, this is like a test account, right? So it's kind of like this fake account number. It's a paper account. But I use Thinkorswim to see charts like this as an example. And then I also use it to see the options chain like this, for example. And then also I do look at the monitor. Like if I have a working order, I can see the working order and then I can adjust the order. But I don't ever look at the positions or the percent realized in this particular, on this platform. I personally go to schwab.com. So if you go to your Schwab page and your holdings page, your positions page, you can, I can't do that because they don't have that associated with paper accounts. Next week, I'm going to be able to show you that exact and live. But in the meantime, to give you an answer to this question, you're going to go to the holdings page, and then you're going to be able to adjust the columns. So you can add columns, you can delete columns, you can move columns around, but you'll be able to see it there. It'll be a percent gain, and it's going to show you exactly the gain. Or you can calculate it. I mean, you can also, let's say if you don't have Thinkorswim, you can say, okay, you know, I sold this contract for $14. Now I can buy it back for $1. What would be the mathematical, you know, percent gain in that? So you can do it that way. Next week, it's going to be easier for me to show that to you. All right, let's see. Oops, sorry about that. What happened to my, oops. I'm just looking for my questions here. You can tell I'm not that tech savvy. I don't know. I'm just going to look up the questions right here. Let me see what other questions I have. It's raining in LA. I did hear that. And it's funny because everywhere in the country, I'm just going to take a moment and hopefully I don't bore any of you guys. But, you know, I like to like be me too. So it's not just about like, you know, teach. I want you to understand who I am. So it's interesting to talk about like personal stuff. LA is like the one place in the entire country when it rains, people like literally freak out. I'm shipping a car. I shipped my car from New York recently. I've had a car in New York. We don't really even need a car in New York because I take the train everywhere. And I shipped it to LA recently, and it's in LA now. And I needed to coordinate with the shipper to bring it to have my son pick it up. And so yesterday I talked to him, and I was like, his name is George, and I was like, George, you know, when can you bring it to my son's place, Adam? And what time on Saturday? And he was like, oh, I can't do it Saturday because it's going to rain Friday and Saturday. He said I have to do it on Sunday. So he doesn't usually work Sundays, but he's going to make an exception because he doesn't want to go out in the rain. It's funny. Interesting. All right, let's get back to business, yeah? Could you please take a look at Irene? Okay, let's look at Irene. Somebody else mentioned Irene. Irene is like a, it's like a it has to do with crypto, and it's got some crypto stuff. So let's take a look at that. So first, what are we going to do here? We're going to pull up a chart, right? So I just added it to my watch list here, and then I'm going to pull up a chart right here. And first, I'm always going to look at a 1-year chart, right? So this is a 1-year chart. It just kind of gives me an idea on where has the stock been trending, right? So it's kind of been like steady, 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 sideways. We call that sideways, right? So typically when things are sideways and then they break above the sideways channel, that's like a resistance marker. So below is like a support level and above is like a resistance, right? Typically when it breaks above a resistance level, it will keep going. And you'll see, oh my gosh, I don't know exactly what happened, but you know, this particular stock went from like $5 to $70 in the matter of, you know, just a handful of months. This is April right here. So let's say you want to look at Irene as an example. Well, let's take a look and see what the contracts are going for. Now, today's the 14th, so we're not going to really look at today because there's only like a half an hour left of the market. So let's look at next Friday, right? So the stock is $46 per share, right? 46.73. So we see the strikes down the middle. And let's say we wanted to, I don't know, look at the volatility on this. Holy cow, implied volatility, 130%. What does high implied volatility say? It means it has a lot of swing. Listen, I feel, my son said the other day, mommy, he calls me mommy still. My kids call me mommy, even though they're older. He's 20, my daughter's 26. But it's funny, they just always still say mommy. He says, mommy, you're always saying the same thing on your videos. I feel like I am saying always the same thing. And maybe that's, I don't know if that's not good or that is good. I don't know. But I know this, you know, there's not a lot of stuff to learn when you're talking about options. So that's why I kind of like say the same things over and over again. So as you keep, repetition is the mother of skill, right? Tony Robbins says that. As we keep hearing things over and over again, it like solidifies in us. So really what you want to keep in mind is, you know, here's the strikes down the middle. How conservative, how aggressive do you want to be? What price do you, or are you going to feel okay purchasing Irene if it drops below that price? I don't know. Let's take a look. So you want to look at, let's say, a $40 put. Let's just start there. It has an 18 delta, right? So 18% likelihood it's going to drop all the way down below $40 in the next week. It last traded at $96, right? Let's take a look and see what the rate of return is. $96 divided by 4,000, right? Because if it's a $40 put, you're committing $4,000 if you're not using margin, right? So that's 2%. Oh my gosh, if I'm making 2% a week, holy cannoli, I'm making 100% per year. If I do a trade like this once a week, I'm literally making 124% of my money. Maybe I want to go a little more conservative. Maybe I want to do like, you know, a $35. Let's look at a $35 put. It only has a 7 delta, so it's not very likely. 150% implied volatility, super, super high. I encourage you, don't necessarily look at the dollars, look at the rate of return because you can always scale things, right? So like the rate of return is most important, and then you could do 1 contract, you could do 2 contracts. I always say start with 1 because you guys are new. Just start with 1, and there's no need to like be a cowboy and go in too heavy, right? Like there's lots of time. A lot of times, sometimes when we learn options trading, we kind of get carried away because it can be exciting, right? But we don't want to look at it from a gambling mentality. So let's just look at a $35 put. This last traded at $36. So $36 divided by 3,500. That's our rate of, that's our capital that we're putting up in case we have to make this trade, right? We're making 1% on our money. So check it out. This might be a great trade, and here's why. We're putting up 3,500. Worst case scenario, we have to buy the stock and it goes down. And let's say worst case scenario, the company goes bankrupt. We lose 3,500. So depending on how much money you have, right, that might not be, you know, a significant risk. I mean, you want to think about what's the likelihood of a company like that going bankrupt. I don't know. I don't really follow Irene. I don't trade it. I've heard of it before, but I don't know much about the company. But you want to do that due diligence. You know, how how comfortable are you holding those shares if you had to hold them for a long time? Now, you make $36, there's only a 7% likelihood it's going to go down. And if it goes down, you buy 100 shares. So you're buying, okay, here's the thing. You keep the cash anyway. If it goes down, you're buying the stock that you like anyway on sale. So it can be a cool thing. I know I'm at 3:30 now. Holy cow, and I have a lot of questions. I'm going to answer 2 more quick questions. And then, like I said, I do have to cut it very shortly because I'm gonna hang out with Adam a little bit before he goes to the airport. And then Monday's a new day, so don't worry about it. Let me just look for a good question. Give me a moment here. Theta, somebody asked about theta and extrinsic value. Listen, I'm not going to get all this stuff, options trading, it can be as hard as you make it or as easy as you make it. I don't really look at theta. I look at delta. Delta tells me the statistical likelihood. I don't look at theta is like time decay, and there is a value to that, but I try not to make things too difficult. And I also don't look at intrinsic value. I try to do what's easy. Listen, easy things are easy to replicate, right? When things become like difficult or challenging, a pain in the neck, you got a lot of steps to it, it can become not as replicatable. So I just don't do the hard stuff, you know? Let's see. Let me go through and find a couple of two other good questions. So what you're saying is to just buy the contract back if it's more than what you sold it for. Excuse me. So somebody's asking, what I'm saying is to just buy the contract back if it's more than what I sold it for? No. So first of all, I'm not suggesting anybody do anything. What I'm doing is walking through kind of, okay, here's your choice to do this. Here's your choice to do that. Here's how it looks if you do this. Here's how it looks if you do that. Also, I want to say this. Sometimes people ask a lot of questions, and I love the questions on here, and even on my YouTube channel. I love questions, and I appreciate that. Sometimes based on the questions, you can tell that you don't know a lot yet about options trading, and that's okay. But I would encourage you to watch, let's say, a longer video. Like, I think I put this in the comments last time. I put this 6-hour course that I did recently. Now, people paid like $300 for that. Not that that's that much money, but they paid $300 for that, and I put it for free on YouTube. And it literally walks through step by step. Here's what a put means. Here's how to sell it. Here's how to choose the strike price, expiration date. Here's what it means for a covered call. I would encourage you to like watch a video like that. So if you don't like know a lot about options and you jump into this live stream as an example, and then you start asking questions, it's okay. But it's kind of like this. It's kind of like I'm sitting down watching a movie, let's say, and then my daughter comes in the living room halfway through. And then she sits on the couch and she starts saying, who's that guy? Well, what does this mean? What's he talking about? It's hard to follow unless you like kind of started from the beginning. So options trading is the same thing. Just you need to take a little bit of time. So many people don't take the time at the beginning to learn the basic fundamentals. I highly encourage you, take a Saturday and Sunday and just like walk through, just watch it on the fast mode. You could do that. And it's 6 hours, and then it's maybe 5.5 hours or something like that. So hopefully that answers your question. I'm going to do one more question. Let's see. I'm going to look for a good one. Give me a second here. All right, so this is a good one. And if I don't get to all your questions, I'm sorry about that. There's so many comments online, and I'm doing my best. And if it's super important and you want an answer, you can feel free to email me. My email is in my my YouTube profile, so you can find that. This is a question that is probably time sensitive. Regarding a lift put expiring today, since the price dropped significantly yesterday, I'll get a sign today. I should not stress too much since I can then sell a covered call Monday, question mark. I haven't looked at lift in a while, but let's take a look at that. So first of all, in answer to your question, number one, I would not stress. Number one, stress, being nervous, having fear, those are all like really bad emotions that like really mess with your whole, I don't know, your whole physical being and stuff like that. Not to get too like woo woo, but those are really negative emotions. You don't want to be like nervous about anything. You want to understand this. Hey, if I'm selling a put and I'm taking in premium and taking in income, I'm okay buying those shares if it goes to that price. Okay, so you already kind of determine that, and then if it happens, yes, you just sell a covered call afterward. So let's take a look at Lyft. I haven't looked at this in a while. So let's see. Here is a 1-year chart. So it kind of like went up, and it went down. I don't know where you're going to get assigned, but let's say, I don't know, let's say you get assigned at $25 or something. I'm just using that as a round number. You could turn right around and sell a $25 call, that expires on Monday for 15 bucks. So I always will sell a covered call Monday after getting assigned shares on Friday. So that is, and then you take in more cash. And then if and when the price comes down more, you can actually look at selling another put and averaging down your cost. So that's also a good thing to do. Let me see. I'm going to do one more question. Let's see. I'm going to find a good one. What is the best way to grow a very small account? Stay tuned for that. I'm going to open this new account. I don't know what you mean by very small. Everybody's definition of big, small is kind of different. I'm going to open this new account over the next, I don't know, as soon as I have some time. I think I'm going to start with 5,000 bucks because I figured that's kind of a small account. And you could just copy my trades if you want to. Anyway, I hope this is helpful. Listen, I'm gonna call it because it's been 6 minutes longer than what I anticipated. I'm gonna go hang out with my son, who I dearly love, and my daughter, who's here as well. And then my son's flying back to LA. I want to leave you with this. Options trading can literally change your life. Why? Because you don't have any customers, you don't have any employees. You can do it from anywhere in the world. You need a laptop, maybe a phone. You could just trade on your phone. I don't personally do that. And you can create yourself income from week to week. And it can literally be life-changing. You don't have to like call your boss and ask for some time off if you're not feeling well or something like that. Yeah, it's life-changing. So I thank you for being here. I thank you for your attention. If you had a super important question or if you had a question that you're bummed that I didn't answer, just email it to me and I'll answer it. Catch me Monday, 3 o'clock, same time on the live stream. Maybe I'll have the other account. I got to see how long that takes to open a new account. And then we're going to show that live. So thanks again for watching, and I'll see you.